Hey everybody, John King with Summit Funding. It is Friday, the 2nd of June, and I want to give you my market update as I do every single week. So thank you very much for tuning in. So 3 basic topics I want to cover today. First of all, where interest rates are at right now and what's impacting the interest rates moving up and down. Secondly, specifically about interest rates and how the banking crisis that happened in March that kind of has been happening still and how that's impacting interest rates. And then the big one I want to talk about today is why the media gets it wrong every single time. And I'm going to talk about some charts and statistics and show you how perspective matters, and that we're going to see some dates and times in the past that the media said, hey, it's a horrible time to buy a home, yet it really wasn't. And rarely did they get it right. And so I want to go over that and give you some context, because a lot of people keep asking me, John, I don't think it's a good time to buy a home. I'm worried about house prices. And I'm worried that we're going to crash, and the media is telling me it's going to crash. So let's go ahead and dive in. First of all, interest rates. Interest rates have been highly, highly volatile. They're going to continue to be volatile. We're dealing with, first of all, inflation. That's been a major issue. We're dealing with the concern about a recession, and we're dealing with the issue of what's going on with the banking crisis, and that's a whole separate issue. But here's the bottom line. What we saw in May is we saw interest rates really move up in May, and it had to do with inflation not necessarily being as under control as we would hope. And it has to do with the fact that the Fed may not necessarily stop raising rates as soon as we had thought. Now, the last thing that really moved interest rates up was the debt ceiling crisis and the issue that I talked about last week, which is what happens if the federal government doesn't pay their debts. Really, it becomes a highly risky situation to invest in treasury bonds, which will drive the interest rates up. And so people who are holding treasury bonds right now are saying, hey, I'm afraid it's going to become a hot potato. And so rates were already moving up. Well, we now have gotten the House and the Senate that have passed the bill to at least raise the debt ceiling enough to cover the next 2 years. And that means that all we're waiting on is the president's signature. Maybe by the time that you listen to this, the president will have already signed and passed that bill. And then the debt ceiling will not be an issue at all. That's caused interest rates to come down pretty good on Wednesday and Thursday of this week. But this morning we had a strong jobs report, and that strong jobs report is creating major concerns that, look, if there's a lot of job growth and wage growth, those people have money to spend, which is the definition of inflation being too many dollars chasing too few goods. Well, the number of goods hasn't come up, and the number of dollars keeps rising. So the Federal Reserve is really looking at employment numbers, and today's employment numbers were actually really positive, but that's not positive for the markets. And it's creating a major catch-22. So we got to wait and see. We're seeing interest rates in the mid to high sixes right now, and we're going to see a lot of volatility with those interest rates over the next 6 months. I think we're likely to stay in the range we've been at, which is bouncing from 5.75 to 7.25 and kind of bouncing in between. The biggest thing that I think people are underestimating about interest rates right now is the banking crisis and how it's impacting interest rates. Because interest rates for mortgages have to do with supply and demand of how many mortgages are being created and who's investing in those mortgages. And regional banks did a lot of investing into mortgages, and mortgages have become a hot potato for them. And they don't have the liquidity to invest in them. They don't have the desire to invest in them. And they're pulling back in mortgage financing. And so even with the government-backed loans of Fannie Mae and Freddie Mac, we're dealing with some major fallouts because you've got the Federal Reserve that took over Silicon Valley Bank and Signature Bank, and the third one, First Republic. And those companies held a lot of mortgages on their portfolio. Well, the federal government now has to sell those mortgages, and that's creating too much supply. So there's a lot of reasons why there's major lingering issues from the banking crisis, and I don't think we're done. Now, I'm not sure we're going to have more banks fail or not. I'm not sure we're done with that either. But I think that the lingering impact of the credit tightening is going to continue. And I'm seeing Fannie Mae and Freddie Mac continue to tighten what they're looking for in credit. And it's becoming more and more challenging to qualify for a mortgage. And that's kind of a byproduct of what we're dealing with here with the banking crisis. All right, my last topic I want to talk about today. the fact that the media gets it wrong so often when they're talking about house prices and saying, man, we've hit the peak. It's a horrible time to buy a home. And I want to show you some numbers in a chart so that you can really dive in and understand what we're talking about and be able to think and make your own decisions instead of what the media is doing. So the first thing I'll tell you is the media has one job, and that is to sell subscriptions to the newspaper. I know what's a newspaper. To get people to click on the link to watch their video or to read their blog or their news article so that they can get advertising dollars. That's what they're here to do, is to get advertising dollars. So they need clickbait. They need articles that make you think, make you worry, and negative news sells. So the media is not inclined to give you good news and say, hey, historically, it probably ultimately will turn out to be a really good time to buy a home. And I want to explain to you graphically, not graphically, but with a graph, I want to explain to you how these numbers play out. Here's what we're looking at. We're looking at a chart of the median home price in the United States going back from 2000 all the way to today. So first quarter of 2023. What you'll see over time is, hey, prices were really low in 2000, relatively low. In 2001, they moved up and hit their peak in the top of 2007, hit their bottom in 2009, but they kind of hit a second bottom in 2011. And there was more stability in the market in 2011. And so a lot of people, if I said, hey, if you could go back in time and pick a time to buy a home, really late 2011 was the best time to buy a home. Everybody say, man, if I could have bought a home then and compared to where prices are now, even with this recent dip, everybody would say that's a really, really good idea. And I would be happy to buy a home during that price range, during that timeline. But let's rewind here. Let's go back from 2011. Oops, I need to change this. So let's do 2000 to 2011. So let's see if I can get here pretty easily. Sorry. All right. So 2000, I'm at 2013. Let's go backwards here to 2011. Beautiful. So what you're looking at right now is if it was right now, summer of 2011, and you were looking at this chart and you were saying, hey, house prices have been coming up and up and up. They hit their peak in 2007 and they've been falling ever since. It's a bad time to buy a home because house prices are bad. Okay, it's a horrible time to buy a home because we're seeing a drop in house prices and they've gone down and down and they picked up a little bit and then they went down and picked up a little bit, but now they're going down again. And everybody said it's a horrible time to buy a home. Do not buy because house prices are not, it's not a good idea to invest in housing. Now we know the truth because I showed you the truth a minute ago, which is this moment right here in 2009 or this moment right here, as we saw the numbers drop a little bit more in late 2011, was the best time to buy a home. These two times were the best times to buy a home. But if you look at this chart right now, you'd say, oh man, it's popping up right here and it's going to come right back down. Kind of like this peak. It's never going back to where it was. Never going back to where it was. That's the flaw in the thinking, is everybody has recency bias. They say, oh my gosh, housing prices have been falling and they're never going back. But if we keep looking, no, they keep going up and they keep going up and they keep going up. And now we fast forward all the way to 2018. And we see the same thing. As a matter of fact, I'm going to slide you backwards a little bit here. And I'm going to show you that right here. So we're hitting early 2018. Doesn't that look eerily similar to right here in 2007? We went up and up and up and up. And then we had a little bit of a drop. And then it went up again and we had another drop. And what keeps happening? In 2007, we saw the biggest decline in housing prices we ever saw. And so the media told you in 2017 and 2018, it's a bad time to buy a home. Do not buy a home in 2018. The housing market's about to crash. It's a horrible investment. We're already way too high. This is unsustainable. House prices were in 2007, we're here and we're way up here. This is unsustainable. Do not buy a home. That was their perspective because they couldn't see into the future and they didn't want to. Nobody can see into the future. But even the worst crash that ever happened in the housing market in 2007 to 2009 had rebounded. And by 2013, the average price in the United States was back above that number. 6 years later, the average price was back above that number. So is it that bad if you plan on staying in your house at least 6 to 10 years? It wasn't that bad even in the worst of housing crashes. But right here, people are scared. Right here, 2009 to 2011, everybody's saying it's a bad time to buy a home. I'm scared. The same thing happened in 2018. As we move forward a little bit and we see 2018 bounced around a little bit and the media is like, see, I told you so. I told you that was the peak. It came down. Yeah, it went up a little bit, but it came down again. Prices are going to come down because it's a horrible thing to buy a home. And then we keep fast forwarding and the media is like, see, I told you so. We're never going to see prices where they were. It's a bad idea. It's a bad idea. And here we are in 2020. And everybody is freaking out now. COVID is in play. We've got housing prices are going to crash because nobody can buy a home because everybody's going to lose their job because of COVID. And it was a very scary time. And the media is like, see, I told you back in 2018, 2017, you shouldn't have bought a home. And here we are. And I was right. I told you shouldn't have bought a home. But guess what? In hindsight, 2018 was the best time to buy a home because between 2017 and 2020, you could have bought a home at these prices. The average median price was low 300s. They're now in the mid to high 400s. Even with the current drop, we're down to around 430, above 430. I can't get that number to show up right there. But we're around $430,000. Yes, there's been a decline. But ladies and gentlemen, this decline is no different than the decline that we saw way back over here. We see a drop, and then we see prices come back and they rebound. We saw a drop, we see prices rebound and come back. We see a drop right here in 2014. We saw a drop in 2011. A drop does not mean the bubble has burst. It does not mean that we are coming to the end of the good times in housing. Over time, we have seen housing continue to perform very, very well. This goes back to 1963, and you continue to see housing do really well. And when you were back in 1963 to 1970, it looked pretty darn scary. So this is the 7-year period from 1963 to 1970. And when you zoom in on that, you see that, oh my gosh, housing is a bad idea because you could have bought a house for $17,000 to $18,000 in 1963. And now the price almost doubled. The house is $25,000 and now it dropped and we're now at $23,000. And the prices keep going down. And so this is a horrible time to buy a home. Or is it? Because as we start zooming out, again, this right here is about a 10-year period of time. We saw a drop and it looked horrible when you're in the middle of it. And the media in 1969 would have said the same thing. It's a bad, you hit the peak, we're done. Even right here, when we were looking at this peak, right, let's go backwards just a little bit. And we look at this peak right here, we go up in 1969, we drop, we come back up, and then we drop again. So right here, the media is like, see, I told you so. Prices aren't coming back. They're coming back. It's all cyclical, and it has to do with timing. These gray bars are recessions. And recessions lead to interest rates coming down, which causes house prices to go up. It's a pattern, and that pattern exists over time. It just looks really crazy when you're looking at it here in the big scope. But when you zoom in, this same patterns happened over and over and over again for the last time. What are we talking about here? 55 years, almost 60 years that we've been seeing this pattern, okay? It is nothing new. It is about deciding if homeownership is right for you and can you afford the monthly payment. So that is the key. The key to buying a house today is not about timing the market to say, oh my gosh, it's a bad time to buy. I don't want to lose my investment. It's about deciding, can I afford the monthly payments? Because that is a major issue. But if you can afford the monthly payment or you can sacrifice somewhere else in order to be able to afford that monthly payment, it is going to pay dividends based on all of what history has shown us. And the fact is, there are still not enough homes built for the number of people that want them. And so when interest rates come back down, everybody's going to rush the field and try and buy homes. And if you already have a home, you benefit from the rising tide of values and you get to refinance at that time. So be courageous while everybody else is scared and stop listening to the media. Thanks, everybody. Call me if you need anything and have a great weekend.